guys, it's Chad Larson with MLD Wealth, and this is November's Money Matters. It's kind of a special episode where we talk about the U.S. election. Last night, stayed up very late, watch our neighbors to the south go through their political theater, and it looks like it is official. We have the 47th president of the United States is the same as the 45th. Donald Trump looks like he's won the presidency. With the Republican Party securing control of the Senate. And Republicans also appear poised to take control of the House of Representatives, albeit by a narrow margin. We won't know this for a while. I think, the note that I did send out yesterday to private clients and just, kind of hold the line and everyone to calm, because politics doesn't move markets, but policy does. It's important to kind of unpack, what has happened, not from, who won. We know who won, and this is actually shockingly something that I didn't see coming. I figured we would have another scenario like we did 4 years ago or 12 years ago with Maricopa County, or the famed Chad of the Florida ballot hanging by a thread and determining. And I thought there was a chance that the market would be in this uncertain state. But I just finished watching Kamala Harris's concession speech, and she did commit to a peaceful transfer of power, and that transfer of power begins immediately. So on January 6th, we'll have sworn in a second term, albeit with a bit of a gap. Donald Trump will be the president of the United States. What does that mean in impact to markets? Again, policy affects markets, not politics. And this is still to be determined. So this is a different president entering. So, all pundits aside and all disposition aside, you have a president coming in with 4 years of experience of being the president, and it will not take as long to gain steam or gain traction into implementing some of his platform, on reform and on regulation and on climate change and on oil and gas and the environment and green energy and back to immigration. It's going to be wild. He's got experience, and he also has something that he has that didn't have last time. He has the Supreme Court. It is Republican-dominated Supreme Court. There is a possibility of a full red wave here, and that is going to be very interesting. It's kind of a bit of a two-part, 1-2 punch. Implementing executive orders. One of President Trump's first actions after being sworn in on January 20th, 2025, will be to begin unilaterally rolling back certain environmental policies through executive orders. This includes initiating withdrawal from the Paris Climate Accord, streamlining the permitting process for drilling on federal land, so it's drill, baby, drill, expediting approval of natural gas pipelines and LNG export facilities, and removing emissions and clean energy targets. He will seek also to lighten the regulatory footprint in financial, IT, energy, and mining sectors. So, a boon to business. It's a Republican era, maybe once again. This will not be the 80s. We're still coming off of a pretty fragile economic recovery and high interest rates. But it's important to note that repealing, implementing, rescinding new executive orders can take time. It's a lengthy process. It can take months and even years to review and respond to potential legal challenges. So we do know one thing: the Democrats will fight everything. Typically, these changes are first heard in federal district courts. And the more these cases are heard by judges appointed by Republicans, the better chances that these executive orders will not be overturned. So investors should focus on who will be nominated to head key regulatory agencies, which will be easily approved by Republican-controlled Senate. This is because the heads of regulatory agencies can often make changes without congressional approval. So you might have a government that can do some things. There was a 77% chance, and that still holds true. There's still news that needs to be trickling in through the market, and we won't know in through the electoral process. If the House of Representatives is also dominated by a Republican government, but there's always there's the rhinos, the Republican by party, but really not by action, which can in a tight red wave can really start pushing forward singular agendas. Think of the old Jagmeet Singh issues we have with the NDP here in Canada. But tariffs is going to be big. Regarding tariffs, Trump's expected to continue down this road aggressively through executive orders. However, there's a disagreement over whether he truly intends to impose a broad 10 to 20% tariff on all imports. If he were to move forward with such a plan, he'd likely face legal challenges and significant political opposition from both parties, including Republicans from border states concerned about trade disruption and the risk of retaliatory tariffs coming from other countries. So, it's not carte blanche, it's not, gangbusters, so to speak, but also further concerns about inflationary pressures could drive bond yields up and slow down this quantitative easing that we've been all inclined to invest in alongside. So, the game changer here would be control of all levels of government. Historically, presidents who take office with full control of Congress have been most successful in advancing legislative agendas during their first 2 years of the term, as their party often loses control of one or both of houses at midterm elections, so making it more difficult to pass legislation. So he'll be busy, real fast, and then we have midterm elections and 2 year cycle after that. So even with a slim majority, president's party can pass spending and tax legislation through a process called reconciliation. And this allows certain budget-related bills to pass the Senate with a simple majority, 51 votes, rather than the usual 60 votes supermajority. However, reconciliation has a major limitation. Changes in fiscal policy cannot increase the federal deficit beyond a 10-year period. This explains why the Trump administration's 2017 tax cuts included temporary provisions that expired after a certain time. So his top priorities are likely to be extending the individual tax cuts from the 2017 Tax Cuts and Jobs Act, which are set to expire at the end of 2025, and further lowering corporate tax rate for companies. So that manufacture in the United States. They'll also be prioritized passing infrastructure legislation focused on transportation and traditional energy sectors, as well as increasing defense spending. So lots of reasons to be bullish. So while this could potentially, dilute parts of his agenda regarding some of the various additional tax cuts, the one thing is that we have to the full repeal potentially of the IRA. That's not the IRA we talk about in the movies and through the Irish conflicts, but it's the Inflation Reduction Act, which has really tilted the competitive landscape in favor of the American industry while attracting investment and forcing the likes of Canada and Europe to massively increase their own state subsidies to remain competitive. French President Macron described the U.S. Inflation Reduction Act as a measure designed to lure investment away from Europe. So we believe a repeal would be very difficult because about 3/4 of the law's funds were allocated to congressional districts held by Republicans. So unsurprisingly, it has increased the support for the law. However, Republicans are likely to try to reduce or redirect some of the law's subsidies and taxes to other areas. But remember, it's something we've dealt with on these podcasts and have talked about, for length over the duration of my career, is the next president will have to deal with the debt ceiling. And as things were not complicated enough, the U.S. will reach its official borrowing limit on January 1st, 2025, amid heightened political tensions. As it has done in the past, the Treasury Department will undoubtedly resort to accounting maneuvers to delay by a few weeks the point at which the country can no longer meet its financial obligations. So while the risk of U.S. default is incredibly low, negotiating additional financing without committing to debt reduction reforms could be risky and lead to further credit downgrades. In 2023, Fitch lowered the U.S. long-term credit rating, and Moody's changed its outlook to negative from stable, citing concerns about the U.S. fiscal outlook and lack of political resolve to address these issues. Like Harris, Trump opposes cuts to entitlements such as pensions and healthcare and has not explained how much higher debt levels could rise if his campaign's promises were implemented. So bottom line, while President Trump and Republicans controlling both houses of Congress, they have significant opportunity to advance parts of their agenda, which includes extending and expanding tax cuts as well as implementing infrastructure and tariff policies. There will also be a light or regulatory footprint in the energy, infrastructure, financial, IT, and mining sectors. However, the financial outlook combined with the upcoming debt ceiling saga in January could create a very challenging environment for fiscal decision-making. As a result, Treasury markets are likely to remain somewhat nervous in the near term. Needless to say, Canada's long-term interest rates are closely correlated to that, of the U.S. That's a lot of word soup, but listen, the U.S. election will shift the economic landscape, particularly if the Republicans do manage to hold on to the House. However, there's still plenty of questions around the extent to which campaign rhetoric really translates into policy reality. It's the age-old politician, a lot of promises with very little follow-through. But we saw with the last Trump presidency, he doesn't mince his words, and he is a doer. Whether you agree with it or not, markets do like certainty. Trump is not a surprise. Trump is not a surprise because he says what he's going to do and does what he's going to say. You might not like it, but there's definitely not, secret agendas really at play. it goes back to America making America great again, and looks to stimulate the economy and create jobs in America, and kind of reduce the size of government. I'm pro business. I'm pro Reaganomics. Markets do like this. So just remember, it's the results here though on our side. It's a bit of a mixed bag in Canada. Like Canadian dollars getting smoked today. And that's gonna cause issues. Ultimately, a healthy U.S. economy is the single most important factor for Canada, regardless of who's in charge. There's likely lots of unwelcome trade uncertainty ahead of the 2026 USMCA review. So it's Canada. While Canada has a relatively well balanced trade with the U.S., especially aside from the oil exports, the Bank of Canada may need to tread a bit more cautiously on rate cuts, given the sustained downward pressure on the Canadian dollar, along with the prospect of a less aggressive Fed and firmer U.S. growth outlook. So, here we are. Donald Trump is president. Republicans could gain full control of the government. And how did the early market react? Naturally, the Trump trade is in full swing. The initial response of the U.S. equity futures were up more than 2% this morning, led by Tesla surging. So it didn't hurt Elon Musk to come out and support Donald Trump. Tesla stock here at the close was up just a shade under 15% on the day. So a great day, and a new all-time high for Tesla shares. So great day to be Elon Musk. The U.S. dollar was broadly stronger. Looking at one of the largest single-day moves in over a year. As discussed, in the last quarter, we have been aggressively still, even at these depressed levels, we had been buyers of U.S. currency. And that's working out very much in our favor. Canada almost doesn't stand a chance right now. So, as treasuries got thumped, with a 10-year rate shooting 18 basis points higher. 18 basis points doesn't sound like a lot, but it's a lot in a 10-year treasury. It's notably higher against the Mexican peso, which is down as much as 3%, as Trump has recently warned of steep tariff increases of at least 25% of Mexico's sales to the U.S. China's yuan was off about 1%, and the Canadian dollar slipped similarly to around 1.394. Listen, that's tough. And when I talk about something near and dear to the Canadian investor, and predominantly in my core market and hometown here in Calgary, being an oil economy, WTI oil prices plunged nearly 3%. I've been saying this for a while. While I'm bullish energy equities, I've been very bearish commodity. Listen, on the back of the greenbacks rise and the prospect of increased U.S. production, this is going to be drill, baby, drill, and supply will come on. And OPEC has a high probability of defending against that, of the U.S. gaining market share. They have a lot of excess capacity, so it could be very rocky roads for oil prices here. Who loves really low oil prices? Gas pumps. And that's a big thing that really hits the average American in their pocketbook. And we saw that a big part of the tenuous kind of decline of the Biden administration was inflation, and being able to drive your car and heat your home and buy groceries. So Trump is going to a stimulating economy. I can't remember the stat, but it's a certain dollar amount per barrel is equivalent to X percentage of like stimulus to GDP in the US. So it could be very rocky for oil prices at the commodity level. So being very cautious in that space. Interestingly enough, like in our core fund, I brought the oil exposure in Canada down to zero. And that's a tough trade. We still have some trades on with the U.S. because we expect economic activity, drilling and reserves to accelerate. But here we are. We always kind of talk about what positioning strategies look like, and if they've changed, through something like this. It's going to take through mid 2026 until you see policy changes in effect and really work their way through the economy. So, this was a surprise. And albeit a welcome surprise for my stance on being very pro-business and smaller government. And I hope to see, in the coming future in Canada, a switch to the other side of the aisle and get away from large government and over regulations. But our positioning strategy remains. We are looking for deeper value within the broader markets, just from nosebleed levels that a few constituents of the S&P 500 have driven, the market to all-time highs from valuation standpoints. We have to just always be cautious. So, I believe the U.S. economy is going to see a very short-term boost from far more accommodative fiscal policy, but concerned about the adverse impacts from higher tariffs and potential trade retaliation is going to keep a very close eye on who's going to be leading up the charge. On the healthcare side, we saw that an aisle cross and a bit of a dirty trick pulled. I don't know how close everyone walked to the election, but RFK, Robert F. Kennedy, did petition many of the courts as he withdrew from the race and endorsed Donald Trump, and really kind of came in and found his own within the Trump administration. He tried hard to petition to himself removed off the ballot, and in many of the courts to distract from those votes going towards Donald Trump. He was remained on the ballot, but it was an outright popular landslide. It was an outright electoral college a win. There's no contestation happening, and so we don't see any of those concerns. But we have to be concerned, like in the healthcare side, a boon to some of the spaces that I've been spending a lot of time with within alternative medicines and alternative treatments to combat this wall of doom that we face in through 2030. 2030 is around the corner. It's only 2024, almost 2025, but 5 years is a nanosecond. Where 1 in 6 Americans are going to be over the age of 60, and the chronic health ailments of an obese population, and rampant diabetes, and long lineups and poor care, and Obamacare was an absolute disaster. I think RFK will, as a health minister, I don't know, it's not a minister or whatever he's within the congressional government for Trump, is within the healthcare sector, is going to advance a lot of interesting therapies and new treatments that are going to be available to U.S. citizens, and the world will follow forthwith. So again, the full impacts of all Trump fiscal policy is not expected to hit the economy into 2026. So this outcome, we're going to have to require a bit of a rethink of medium-term GDP and inflation. But there's always the scenario two. Scenario two is still real. There's still lots to come out in the marketplace. I'm not calling a full red sweep. I don't want to sound like Fox News, but it was quite interesting watching the election last night, flicking back and forth between Republican and Democratic dominated news channels, between MSNBC, CNN, and then Fox News. Obviously, on the Republican side of politics, there's it took everything in them not to cry, and it took everything in them to kind of keep up with state by state calls, because each media channel has the ability to call certain states. Obviously, the results have to be certified at a later date. But if you were watching Fox, Trump won real early. If you're watching MSNBC, there was a bit of a disbelief almost till this morning, and CNN wasn't bad, to be honest with you. Anderson Cooper did look like he was going to cry at some points, but here we are. So listen, it's a bit of a long kind of tirade, talking a little bit about the implications for Canada. Our economy might benefit initially, being our largest trading partner, but trading partner buys 3/4 of its merchandise exports, and obviously energy producers are also going to rejoice if Keystone XL was resurrected. But the country could be one of the hardest hit, along with China and Mexico, from trade tussles. So increased uncertainty about tariffs and the fate of the USMCA ahead of the 2026 review, could depress capital flows to Canada. We need that change in government here very quickly, and I think we'll have some time of this. So none of this is good for the Canadian dollar, which is already challenged by faster rising unit labor costs relative to the U.S. So, so these tariffs and a softer loonie might add some upward pressure to prices, and potential economic weakening could hold inflation below our 2% target to keep the Bank of Canada in easing mode. It's going to be challenges. So, I've kind of gone through some of the key party proposals. extending 2017 tax cuts, limiting taxes on tips for the service industry, reduction of corporate tax rates, removing, and on and on, and in housing and inflation, immigration, pledging to seal the border and stop the migration invasion, and the largest deportation operation in American history. I really want to set the table there too. I've got quite a bit of young staff. I'll put them in the millennial camp, and it's interesting to really understand facts, and I understand facts don't fight feelings, and that's just the world we live in, where people form opinions based on headlines. But the largest deportation in history in the U.S. was through the Obama administration, through the DACA. So large. I'm just going to Google it really quickly. Largest deportation in U.S. history, Obama. So every president can do this. So yeah, so it was published. So Obama deportations versus Trump deportations, context, being everything. But Obama had deported more people than any other president ever in history. And so kind of, albeit that Donald Trump's immigration plan is set to be announced later this week, saying on day one, he's going to begin to swiftly removing criminal illegals from this country. There's still more details to come out. Between 2009 and 2015, Obama removed more than 2.5 million people through immigration orders, which doesn't include the number of people who self-deported or were turned away and returned to their home country by the border of U.S. Customs and Border Protection. So that, Bush, he deported over 2 million. So this is all pretty natural course. I saw Chrystia Freeland, comments will remain muted, and her comments taken from media today on what we're going to do to secure our borders. Canadians are concerned. We share one of the largest land borders in the world, and worried about illegal migration, having to leave the U.S. and looking for safe haven into Canada, where we're already bursting at the seams, with a wide open immigration policy. I don't want to kind of belabor, the point here and use more of your time for the sake of it. I wanted to make sure that I touched base. Obviously, this was supposed to be a November market update. The U.S. election dominated that theme, obviously. Any member of the team is here, and again, we always appreciate your comments and thank you for your trust and support. Reach out if you have any questions or you'd like to kind of dive deeper. And as always, stay safe. Have a wonderful month, and I look forward to speaking with many of you throughout the month and talking to you. Have a wonderful day and take care.